Hi everyone. Good evening. It's so nice to have you here. And earlier, yesterday, I promised to do a video to explain how we can clean up our portfolios. So, what we're going to cover today. If you're concerned with house cleaning, you know that sometimes for so many people, maybe once a year, you go through everything you have, pick out old clothes, dispose of them, pick out things you can give away, things that need mending, things that have no hope of survival, and you just deal with all of that. Well, it's not so different when you're dealing with your portfolio, and so we're going to talk about how to conduct a cleanup of your portfolios. So why is this necessary to do? But for one, you might be leaving money sitting somewhere that could actually be useful for something, but you're not taking full advantage of the benefits you can get out of it. You might also be spread out on multiple platforms that you've forgotten where you hold money, and it's just sitting there. Maybe you have a huge stack of profits that you've not even taken advantage of. Also, you may also be missing out on buy opportunities for investments. You may be missing out on opportunities to sell some things you've held for too long, and it's time to let go of them. You might also be losing money on things like I said earlier. So all of these are reasons why a portfolio cleanup is necessary. About 2 months ago, I was doing a portfolio cleanup for one of my asset classes, and I was able to reduce so much of what I had by selling them off and taking advantage of the profits I got from them to reinvest in things that either were already doing well and had potential of doing even better, or things that had potentials of growing in the nearest future. So these are some of the things you're going to do when you clean up your portfolio. Okay, this video might be long, but I'll try to keep it as short as possible. As always, I am Onyeka Okonkwo, and I teach professionals to take advantage of their income stream to become the boss of their money by giving you actionable financial tips, investment advice, and just helping you make the right decisions at the right time. So part of what we're also going to use for this is the BCG matrix. I learned about this in strategy class a long time ago, and if you have done strategy before, maybe in an MBA program or part of the professional certification courses, then maybe you've come across it. It was made by the Boston Consulting Group, and it's a product portfolio matrix of sorts, and it's designed to help businesses who have various products to do long-term strategic planning. While I was thinking about cleaning up my portfolio, I realized that a lot of the concepts taught in the BCG matrix can actually be applied to your personal finance and portfolio optimization. So it also helps business to consider their growth opportunities. It helps you renew your portfolio of products, decide where to invest, where to discontinue investment, and when to develop new products. For developing your products in the personal investment space, I will think of that as finding opportunities for growth and taking advantage of them. So I'll give us a brief overview of the BCG matrix for those who have never heard of it before, and even for those who have heard of it before. Think of it as a refresher course, and I'll talk us through how to apply this into clean up our portfolios. So the BCG matrix is divided into 4 quadrants. We have the dogs, the question marks or problem childs, the stars, and the cash cows. Our dogs are products with low growth. So they are perhaps products that have gotten past their maturity phase, now already in decline. So you're not getting so much out of it anymore. Question marks or problem child have high growth markets, but you're not so sure if they will be problem childs, if they will be dogs in the future, or if they will be stars in the future. They're just neither here nor there. With stars, they are high growth market products. They will likely give us the highest level of returns for investments. Think of this in terms of, if you trade stocks, then they're like growth stocks. Think of Tesla, that has been growing rapidly in recent times. And cash cows have low growth markets, but they have high market shares. So some of these may be your blue chip companies. Now, if you want to use the BCG matrix to clean up your portfolio, when we say dogs, that is assets that are in the decline phase, you might want to consider selling these. On the case where this might be different for you is if perhaps the business is injecting something into, if the owners are injecting something into the business. For instance, they're coming to get maybe new product lines, investing in R&D, and there's a chance that they are going to innovate in what they already have. I'll give an example of this. I used to own Peloton shares. Peloton at the height of COVID were a home fitness company. So because gyms were closed, people who wanted to stay in shape because they were not going out could subscribe to Pelotons on their apps and then get the equipment in their homes and work out there. So share prices soared. But currently we're in this phase now in our world right now where things are just gradually going back to normal, even at a more accelerated rate now. And gyms are opened up again or still opening up. People are adhering to COVID guidelines, social distancing, constant sanitation, and all of that. And so share prices of Peloton have begun to tank. I think as I guess it had lost about 34 to 38% of its value. But there is news that Peloton has invested in a new product line. But it's going to take a while for them to prove themselves before investors gain confidence again. So for a share like Peloton that I used to own, I've gotten profit out of it. At that time, it was perhaps a star. But now it's just gone down to a decline phase. So now it's a dog. And it's a good time for me to sell Peloton and reinvest the money into something else. So for question marks, you can't really tell if they become star or dogs, like I said. So you may choose to hold it or you may choose to sell it. For this kind of products, you need to pay attention to what the company is offering and make your judgments on market conditions. For stars generate the highest return on investments. They are high growth stocks. With stars, you don't want to sell them. You want to hold. If you choose to buy, you may buy at a very high price. If you already own the stocks, then you can hold, or you can sell a portion of it and then take the gains from that to invest into something else. And for cash cows, they're products in the maturity phase. Think of income stocks, stocks that pay dividends like PepsiCo, Coca-Cola, maybe Intuit, and they've proven themselves over time. They yield consistent returns on investment. They might be blue chip companies for you. So these kind of companies, you definitely want to hold them. You don't want to sell them because they are stable. Always at every point in time, tell yourself, don't kill the cow that brings out the milk. So that's a brief overview of the BCG matrix and just what it talks about generally. Now let's talk about cleaning up the portfolio. The first thing you need to do is to take stock of what you own across all asset classes. So maybe you have stocks. You want to have a list of all the stocks you have, a comprehensive list. I did something like that of recent, and this is like a printout of what I have. So, and then after that, you want to, put beside it what sector, what industry this particular portfolios fall under. So, for instance, if I have Tesla Motors, I know it's an electronic vehicle, EV. So I put EV by the side right here. I have Square, is a tech stock. I put that by the side. Nigerian breweries, the into beverages, FMCG, I put that by the side. When you do this, you have an overview of everything you own, and then you also have an overview of how diversified or not diversified that you are. So you might realize after this exercise that maybe you've heavily invested in tech stocks or you're heavily invested in retail stocks. It tells you already, gives you a trigger. They are not fully diversified, and there's something you can do about that. So you can choose to find low performers, sell them off, and then take the profits from those ones and reinvest in a more diversified portfolio. But this is not just restricted to your stocks, which are cryptocurrency holdings. You should do the same thing. So list out all the cryptos you own. Maybe you own BNB and you own maybe Solana and all that stuff. And beside each one, you want to tell, okay, maybe this is DeFi product and this one is NFT, this is metaverse, stuff like that. Maybe some are ETF, the way you have stock ETFs, you also have crypto ETFs. So you need to list all of that and then see how diversified you also are. The next thing you should do is to track all your accounts. If you're like me, maybe you have investments in a certain account that you've just forgotten all about. People who trade crypto often tend to have multiple accounts on multiple platforms. So perhaps you might have on Binance and have on KuCoin and have on Hotbit and have on Coinbase, and so many things, so many places that you lose track of everything. So as much as you can, try to consolidate. If for stocks, you might have stock accounts with multiple brokerages. See how you can consolidate all of those into just one or two places, so it's easier for you to have a bird eye view of everything you own. Then maybe you have two here and one there and three somewhere else and five somewhere else. It's just all over the place. So bring everything together. So at each point in time, you can just look at this account, see your statements here, and know this is everything I own, period. So track all your accounts and consolidate. Then you need to apply the BCG matrix model I talked about earlier to everything. Take a look at what is underperforming, decide if it's something you need to sell. When it comes to applying the BCG model matrix, I learned something when I was taking a course on writing, and a renowned writer had this expression. He said, kill your darlings. That means with these things, you cannot afford to be emotional. Maybe you have a favorite company and you bought their stock, but they're not doing so well now anymore, and you've checked their historical charts, and you see maybe how the stock has done over a 3-year period, a 5 years period, and it's just not doing well anymore. It might be a good time to let it go. Know when to cut your losses and just stop. It happened to me. I bought Kodak stock over a year ago, when there was news that they had gone into the biotech line, and they were going to be producing COVID vaccine. That was a FOMO buy, I'll confess to that. And it did well for a while, and then suddenly there was a news about a SEC investigation, about insider trading or something like that, and share prices began to tank. At first, I thought, oh, let me be hopeful. The SEC investigation will come back and they'll find out that the company's executives were not involved in insider trading. But I was just holding on to hope for nothing. And it kept tanking and tanking. And I had gotten to my buy price and still didn't sell. And it went lower than that. But eventually I had to tell myself, you know what? This is not working. You just have to sell. And so I just sold that stock and let it go. So become emotionless and just take a pen to it and just cross off things you absolutely need to sell. Okay, the next you also need to do is look at your winners and prune them. You need to trim your winners. So if you've gotten a lot of profits from certain investments, it might be time for you to take profits from them. Cut your profits out and reinvest into something else altogether. So when you know to take profits, sometimes the increase in share price or the increase in the cost of your price of your crypto might be just people pushing it. In a couple of months ago, we had GameStop shares and we had AMC shares soar like this, but it wasn't any market fundamentals per se that was causing the rise. It was Reddit users who were causing the increase. Remember the time when Doge, the crypto, the meme coin also soared? It wasn't because there was any fundamental thing going on, it was because Elon Musk tweeted something. And so when you have abnormal profits like this, it's important for you to take your profits as soon as you can take your profits. Try not to get caught up by greed, because if it drops again, you might find out that you had over 300% profit that you did nothing with, and then it just drops and you've gotten to maybe your initial buy price. You're going to feel pained by that. Okay, so there may often be stars. So when you see stars like this, regularly take profits and rebalance your portfolio. You don't want too much of your asset to be hinged on one particular investment. So at every point in time, trim. Something else we can also do to clean up our portfolio is look out in the pipeline for, create new pipelines for potential growth companies. So when you take the profits from your winners, your star companies, you've sold your dogs, remember, you have that cash. You've taken profits from your stars, you have that cash also. Your cash cows probably have paid you a couple of dividends, you still have some of this cash. You might want to scout around for potential products that can possibly rise in the nearest or the farthest future. So imagine a time when electric vehicles were just something people thought about, but we are not sure if countries and governments would adopt them. So people who bought Tesla shares for maybe $40 something way back, they bought into a future. They anticipated and they speculated and thought in the nearest future, or in about 5 years time or 10 years time, this will become a thing. So invest in companies like that, but make sure you understand their business models. If you're talking about crypto, make sure you read their white paper and you know what the founders have in mind for this and how it's going to work, and see if they're constantly making updates and if there are constant product enhancement things going on in them. So you can invest in things like that because they have the potential to become stars in the future. If you have any idle cash, put them to work for you. So savings account is also something we need to consider while you're taking a list of your stock, with your portfolios and everything. So you have idle money sitting somewhere, you may want to consider dollar cost averaging regularly on a monthly basis, putting money into something and then making use of that money. Let it yield more. Let money mint money for you. Okay, I've talked about rebalancing your portfolio is necessary, but let's also talk about investing according to your age. So if you attended my last webinar, I talked about how to invest according to your age, and at what stage you are in life, how to spread your risk and how to spread your assets, your investment classes. So you might realize that when you made those initial investments, you were probably in your 30s, you were working, you had some years ahead of you, and you spread like that, and you're doing your cleanup now because you've forgotten about all those things for about 10 to 20 years, and now you're coming back to do your cleanup. You need to trim some of what you own. You need to step out from a lot of your high risk investments and just come into some more medium and low risk investment classes. So these are things you also need to consider while you're cleaning up. I hope this has been useful and you've been taking notes. If you have not, feel free to replay this video again and ask any questions you might have in the comment section. So where can you do some of your research to find some of the things you need to know before you decide to chuck something or hold something? If you invest in cryptocurrencies, CoinMarketCap is a great research place. If you use Binance, actually most centralized exchange platforms have an option, a research tab that you can find on the home screen, or click more and you probably see it there, and you can just take a look at what cryptos you're holding, look at their charts, look at their white paper, look at their social media pages, Twitter, Telegram. Most of them have Telegram groups, so find them on Reddit, see what's happening. Have there been project updates? Have they been writing new codes? Has there been contributions? If it's been dead for a couple of months, it might be a good time for you to step away from it because nobody is actively monitoring what's happening anymore. If social media pages have been dead for a long time, consider getting out of it now. Again, sometimes you might have already made a loss on something, but there's a potential that there will just be more losses along the way. Know when to sell. It's no use holding money. Look, if you bought something for $100 and you have made a loss and it's now $80, but you're just going to keep, your dip will keep getting deeper, right? So instead of just holding on to it, you can sell at your $80 if there is no hope of an increment in the future because there is just no sign of life or activity, or the market fundamentals are not working in the favor of that particular asset. Sell at your 80, use your 80, buy something with potential of doubling or tripling in the nearest future. You've made a gain. So we need to be smart about these things. If you invest in the stock market, you can look at websites like Yahoo Finance, Bloomberg. These sites talk about stocks. They always have news. They always have analyst reports you can read. And let's not forget to look at the company's annual reports. You can find them on their website. They're all public companies, or you can just Google sec.gov and you will see their 401k accounts. When you look at the annual reports, be sure to look at the director's reports on their risk management strategies, what market risk they're exposed to, what the company is doing about it, if they have any product innovation they're coming up with, all of that. Take a look at everything and just understand what's going on there. Again, a portfolio cleanup is necessary. It is not restricted to just stocks and crypto. You can look at your mutual funds. Maybe you're paying high fees. Maybe you have better interest rates from a different company. It's okay to move your mutual funds from one company to another. I had someone who came to my inbox one day and asked about fixed assets. And the company he was investing in gave me really low rates, and where another company was giving a better rate, and he just moved from one to the next. So always shop around for good rates with good companies and maximize your return. So that's all of it that I have for you. If you have any questions, again, I'll be available to answer them in the comment section. I hope you got value out of this, and I hope that before this year runs out, you will be doing a thorough portfolio cleanup. All right, guys, see you next time.